you understand, says that.
Welcome back, guys. Good evening. How are you all doing? So, I'm going to apologize because if you really do watch my Friday video, I told you guys I'm going to do weekly remark, right? Weekly video on Sunday, but there was no light, I could not. So, I'm so sorry for that, guys. I'm really, really sorry for that. So, a new week has begun. Let's see what the week has for us. And to bring into your notice that the market currently, the market condition for dollar and euro is currently on a ranging market. Like I keep saying, it's really not going in one specific direction, totally in one specific direction, either on the weekly or monthly. So the price is actually, you know, seeking liquidity internally and externally. But right now we are currently on a range bound liquidity uh market. So why having this on the back of our mind, so in case we should all know that the market will definitely be moving in a way in which you might be expecting a certain liquidity to be swept, and it will not be swept and the market will continue in another way. And the the amount of volume that is coming in that particular market will be lesser compared to when the direction of the market is very clear. So that will give you a clue that going into the market, you need to be very conservative about your result and also conservative about how much, how much are you exposing yourself to in this market. So, oh, I will dive into the business we have for today. So, we all know that today is 26th. We all know that today is 26th February 2024, which is Monday. And now, the Euro US dollar daily contract for Monday, 26th February 2024, deliver as call out from Friday projection. Now, I am very pleased to see Euro deliver above the daily and weekly candle consequent encroachment of the week, which eventually is telling us that Euro is still bullish and the bearish PDRAs fail to hold price. Now, what I'm trying to explain there is that if you look at my Friday video, I did mark out this candle and I take out the I take out the consequent encroachment. So I did mark out this week and I take out the consequent encroachment, which is probably here. So if we are actually bearish, we should not have passed above this high, this consequent encroachment of the fair value gap. We shouldn't pass above it. And now that we have seen market purge it did not purge it with weakness, but with with its willingness to still continue that particular one move on the upside, and also the slower time frame PDRA, which is the bearish PDRA, was not respected, which all these factors have bring to us that there is a change, like the market is still what bullish and it's not ready for any lower time frame delivery, or sorry, it's not ready for any what sell side delivery. Now, today price deliver sweeping above Friday high, which is the buy side liquidity that was taken, and close above it, showing the relative momentum in price to go higher. Now, casting forward, if price is bullish on euro, I'm anticipating for tomorrow candle low to intercept with Friday high and the draw on liquidity, which will be the relative equal highs. So what I trying to say is that you see this blue line that I mark out here. I If we are bullish tomorrow, I will be very, it will make a whole lot of sense if we price back and intercept with this mark, with this area, which is next day candle, before going higher. Right, and also we can continue going higher if the market is really seeking buy side, and that will lead us to the formation of what, a fair value gap on the daily price, right? So if having these two things at the back of your mind, that the market could do either one of these things. It's either it price into this area before we continue, or its market just open, it's like just did already, to open and just continue going higher. So with that, we have come to the Euro US dollar daily contract. Why? So on the Euro US dollar, we we have, I did mark this area with a rectangular tool, but I decided to, use a line to indicate it for some reason. Now we can all see that this line here is a volume imbalance, and that has been respected and also respected. Now, which is a major reason why price did not have to go for this, because if we price through it, we are going to use it what, to as a support, or now it's going to, since it acts as a support before, it is going to act as a resistance now. So it is going to now act as a resistance to hold price from going what, higher, which is what we just see on today price. And now this red line indicate Friday price and today price. So that being said, is that we close at the brief of Friday low. So if there is a very high chance that we are going to intercept on this particular market, but now the relative weakness in the dollar is, that means the dollar is showing a very large weakness to go lower. So with that factor, or with that in our mind, or at the back of our mind, we might not see euro have intersect with that with that Friday uh, Friday high. So it is very important that we take this into a very strong consideration. But also we can see a little higher in price tomorrow before going lower. Right. Well, we wanna before I finish this video, I'm going to talk about the weekly calendar, which is what we have tomorrow. So this has brought us to the 4 hourly contract on euro, which is euro US dollar 4 hourly contract. So the euro US dollar 4 hourly contract shows perfectly the price delivery on euro and the impulsive rally higher in today price. Now on the 4 hour, we can see that euro did not price below Friday low, and it respect the consequent encroachment of a 4 hourly candle and market rally higher, leaving an untapped fair value gap, which is going to be a proposed what, PDRA in tomorrow trading. What I'm actually trying to say there is that we can see this particular candle. If you measure the difference from the week, from the close and the low, you're going to get your midpoint, which is this red line. Now we can see how market stay above this red line, and we did not go through it. That is when you are using your and that wick is also in the right place. meaning that if your bias is bullish and you are using a candle wick that is, that is in that direction, it will be more effective. So now, those weeks I call out on Friday wasn't that effective because the direction of the market is not going lower. If we are to go lower, we are not supposed to see that week bridge. That Since that has disqualified us, that is why we had to have what a change in what direction in our bias, because we're going to work with what the price is saying, not what we think. So because now the price is showing momentum to go higher, we're going to base our analysis on a bullish bias. So what I'm trying to say in instance is that tomorrow we are going to look for what a bullish day candle. And one of the things I've noticed since 2 weeks ago, the market has not been respecting our normal daily time frame price delivery time. The New York or the London never create a new low. I'm going to explain that when we get to the hourly candle. Now, casting forward, I am anticipating for the 4 hourly fair value gap to be respected and to deliver price higher. It is to deliver price higher because it is below the Friday candle high. So it is also important to expect an what institutional order flow entry drill. Now, what I'm trying to say there is that if eventually price come below and tap on this fair value gap, it is not going to go a long, like it's not going to tap on it and go far. It's going to tap on it and continue moving. Why? Because we are also, it is on the 4 hour, on the Friday candle high, and also there is a smaller time frame, 1 hour what fair value gap that is very close to price. So all these factors will give us an institutional order flow entry drill on this if we eventually get here. And also you should know that we might not still get here due to the daily analysis and what the euro is saying or what the euro implies. Sorry, what I was trying to say is that what the dollar index implies, not euro. Now, this is the dollar index 4 hourly contract, and we can also see that on the dollar index, the fair value gap we created has already been tapped and price is going lower, which is another reason why euro might not retrace. It will just continue going, because if market open, there is a higher probability that we are going to continue delivering lower price, which is not going to give euro the opportunity to retrace before it continues, right? So have that at the back of your mind. And to say that if we did still price back into this what opening gap, this opening gap, which is a weekly opening gap, that we're going to still reject that area and go lower. You can see how our market is resting inside it. We might whip through it on a 4 hour, but you can see how we are resting and sitting on it very, very precisely. So that has bring us to the end of this 4 hour. Let's go to hourly candle. So this is the Euro US dollar hourly candle. Uh, Euro US dollar hourly contract. Now the Euro US dollar hourly contract shows nicely the intraday price action for Monday 26 February 2023. Sorry, 2024. I mean, the daily profile is an obvious 12 o'clock AM New York local time as the low of the day that open price, sorry, as the low of the day, that is the opening price, and begin delivering what price higher impulsively. This particular candle, which this particular candle is the opening price for today, which is 12 1 2 2 o'clock AM before we can see that we did not create a short-term low, or we just continue giving higher prices. And I don't know if that is due to the impulsive nature of market currently, but I think this is actually how will I say, it's actually no market is not following the right order of or time frame, right? Even if you look at the New York session, which is 8 o'clock, this is the 8 o'clock candle. The 8 o'clock candle started 8 o'clock, we rally lower, but we did not really give any pure or a perfect move on this candle, and we just keep consolidating, because the major delivery has already been done on this leg up. And that is also going to bring us to what we say is that this is the Friday high, right? And we can see that this fair value gap has not been tapped. So if eventually we come lower and tap on this fair value gap, we are going to see how market react with this area. Then if it's giving you, or if it's giving any willingness to change the direction to go higher, which is our bias initially, then we're going to engage, right? So I tend not to just tell you guys to go and put your order here, put your stops here, and engage. I want to see. That's why I just give you a clue. Now, this clue is just like a guide. So you go to your chart, mark those areas out, go and see how market is reacting to them. If it pleases you, you can engage, right? I on a demo account or live. That is all depends on you. If you win, that is on you. If you lose, that is on you, not me, right? Okay, that is it. So that is it for the Euro US dollar. Now this is the DXY, which is the dollar index, and on the hourly we can see that this our bearish order block was used yesterday, and alright was used today, sorry, and we started going lower again. So if we are going to go continue this lower price delivery, we're going to see per market just no vital news and all that. We're going to check all that to see if there is any vital news that might hinder the price delivery. All right. So also, this is why we might continue to see lower prices, or otherwise there might be a reversal that will clear this short time swing high to deliver market lower. We have swing high, a swing low. So which one is more likely to be taken? We have this is more likely to be taken. So, but if the market decides to come take this one first before we continue, I think all is still what algorithmic what price delivery. But now I want to see market work with time, right? Because it's not working with time, and that is basically why what I'm really getting wrong. Because if it's market is really working with time, then there should be more higher probability than usual. So there is no much news event tomorrow, but there is a particular one at 8:30, which is 2:30 Nigerian local time. And also CPI, yearly CPI, but this is not the regular CPI, guys. All right, so which is supposed to be coming up by what time? Let me check again. Sorry, no, by 7:30 for Australian dollar. So we don't trade Australian dollar, so we don't have business with that. Well, I hope this video is insightful, and if you do enjoy this content, please subscribe to this YouTube channel and like and watch share this video. Like, comment, subscribe to this video. Thank you for coming and thank you for listening. See you tomorrow.